Do you think this may have been, I don't know, I'm sure these policies they were kind of thinking about for a long time, but do you think it may have been like a knee-jerk reaction as well from that recent, there was that recent case in Hokkaido, right, with one of the battery players, and they were always kind of bidding at the high price, and they're kind of trying to bring that ceiling price down. So I don't know whether it's a knee-jerk reaction or they were already having this policy in mind. I'm not sure of the timing.
I think we started.
Pretty much we started. We started the podcast. All right.
Oh,
well,
man. That's a question I actually wanted an answer to.
Let's go there. Let's go there. I think it's
go there,
very.
right.
yes.
It's
He's like sweating.
It's been 5 minutes already.
Let's go there. Let's go there. I think
Right.
that's going to be interesting talks. It's a matter of school of thought.
Yeah. Awesome. All right. Well, let's go ahead.
All right, let's jump right into it, shall we? First off, welcome to the Japan Energy Podcast. So this is going to be the first episode, hopefully in a long chain of episodes, and we'll be doing one over different topics every single time. Today we're going to be talking a little bit about the changes to the balancing market reform from Mahdi and Octo. This is going to be looking at a lot of the balancing products, and this is going to be looking over from FCR all the way to RR. And also, because this change is basically changing the unified ceiling cap from 19.51 to 7.21 Japanese yen per kilowatt over 30 minutes, this will have a direct impact on the Japan market. So today we're going to be talking a little bit about this, and we are joined by...
Well, thank you very much for our two experts here. So firstly, Atsushi Ito. Ito-san, he's the managing director of GridBeyond, one of the most active demand response aggregators in the Japan market. Before this, Ito-san was one of the original members of Enernoc, which was an early player in demand response before it was acquired by Enelex in 2019. Welcome. We're also joined by Dr. Mahdi Behrangrad, head of ESS and VPP at Pacifico Energy, a leading solar and BESS developer in Japan. Mahdi has been with Pacifico for 4.5 years, launched the ESS VPP business, has successfully developed BESS projects, both standalone and co-located with their PV projects. Mahdi has had an illustrious career at Panasonic, Sumitomo Electric, Accenture, and sits on the board of OptiGrid, a trading and optimization startup based in Australia. So, welcome, gentlemen.
And then before we jump into the balancing market reform, let's take one step back and look at the context for a quick second, in particular the three different revenue streams of arbitrage, capacity markets, and also ancillary. Do you want to give us a quick heads up, a rundown for this?
Sure. First of all, thanks for having me. It's a topic very close to my heart.
Sure.
I promise to be as sane as civil as possible. About energy storage and revenue. Anybody who goes into business is searching a healthy return. So what are the returns or revenue stream for energy storage? Let me classify it in what's the things that we have at hand now and some that could be in future. The things that we have at hand now is good old arbitrage. You buy low, you sell high.
That's right.
You have capacity market, which surprisingly Japan has world's second or third biggest capacity market compared to PJM and UK.
Wow.
And then we have balancing market with the colorful set of services that today I think we're going to develop. I'm not going to touch on it right now. But these are the things that we have right now at hand. We should make sure we create a return. But this is not all. We see that in future things like virtual inertia or congestion reduction or let's fingers crossed everything like black start or voltage support services. Everything like this could be monetized in future if the regulatory moves to the right direction.
Okay.
Right. Yeah, and then we're also going to be talking about the balancing market reform and then how it significantly reduces potential balancing market revenues for demand response aggregators and also BESS developers. So we're shifting the economic emphasis towards arbitrage, capacity markets, and integrated optimization. And then maybe for our listeners, Ito-san, can you maybe just walk us through the balancing market structure?
Sure. Yeah, also thank you for having me. Yeah, as Mahdi-san said, the balancing market is consistent of 5 products. As you see, it's structured into different layers based on response time and the functions, the usage of the resources. The FTL is the most lucrative market today, and the response time is 30 seconds as offline. SFRR, 二次調整力丸1, that is response time is within 5 minutes. And FRR, this is also 5 minutes, but just for follow-up control. And RR, this is up to 50 minutes. And lastly, RR fit, this is up to 60 minutes lowest response time. Yes, today demand response resources can participate in the RR fit market, but FTL is not easy to enter those assets because meeting sub 30 seconds offline signal is technically difficult, for most roles. And SFRR and FRR are also not easy for them to respond within 5 minutes. Yeah, because most industrial site is their demand is very fluctuate. Yeah, and their priorities to manufacturing depend on their plant schedule at the site.
So I guess now it really begs the question, what does the new price ceiling change of 721 yen? What does it actually change? What does it actually impact and affect? Maybe Mahdi, you can share with us some of your thoughts.
One thing for sure, all of us that are in this industry, we are aiming to provide a affordable, reliable electricity for the end user. There's no question about that.
Yep.
However, it's a matter of what timeframes you're looking at and what is your real agenda here on what are you focusing on. What we are focusing is to make sure we have a reliable system in long term and an efficient system. So we are seeing a lot of noise on balancing market, the cap price and the bidding. Let's just step back here.
Yeah.
Japan has, as I said, world's second or third biggest capacity market. To give you an image, don't get me on the number, but it's around 2 trillion Japanese yen. And all the balancing market combined, at maximum, it's something between 100 to 200 billion Japanese yen. So orders of magnitude of difference.
Right. Yeah.
Where does the money go in capacity market? More than 90 something goes to legacy systems, legacy players, and many part of it are old, inefficient fossil fuel generators that couldn't survive without that money.
Yeah.
But when we go to balancing market, we see a new breed of technology, likes of what Ito-san is doing, or like what Pacifico is doing, that trying to create or add a new resource and then come to the most sophisticated part of the market, which is balancing market. We hear the sounds of, end users' burden should be reduced. Absolutely no argument on that. I fully support that.
Yep.
But it begs the question, why do we start with something as tiny as balancing market if you really want to reduce the... Just to give the listeners another perspective is that when you're talking about subsidies, the utility and gasoline subsidies that taxpayers are paying is around 4 trillion Japanese yen. Capacity market alone is around 2 trillion Japanese yen. So you're seeing something huge. But we are not hearing the noises on that.
Right.
We are not hearing that pressure on that, oh Lord, the sky is falling, somebody bid it high. What happened?
Yeah.
So balancing market is something that we created and is the lifeblood of many new technologies like demand response, like battery right now. And then we're seeing that even now, we don't have an oversupply, we have an under procurement. Look at Ito-san's slide on here. Just the listeners want to see. The situation in Japan is that balancing market, we created a market and it is under procured. So all the rationality that, well, we have learned in economics and market design courses back when we were students says that if you are under procured,
Right.
move toward increasing the supply. But what we're seeing in Japan is something very unique. That, you know what? Let's erase the demand or take the market off. And these kind of nuances is not hidden from a smart investor eye. We are not center of the world. We are competing for infrastructure fund to build infrastructure in Japan. We are competing internationally. Money has many options.
Yeah. And it has to be
It's-
commercially viable.
Commercially viable. It's our job to make Japan as rational and attractive as possible for investments.
Yes.
So then, before going to the nitty-gritty of number, what number is right, it begs the question that you are creating a market. And in market, two things are sacrosanct. Number one, supply demand. This should decide the thing.
Sure.
You cannot sit outside and a regulator can, you know what? I'm going to chop off part of demand and give it to someone else. That means we don't have a market. And second is the price signal. Price signal are like pain signal in a body. You never go to a doctor with fully loaded with painkillers and say, hey, what's wrong with me? Price signals tell you what's wrong and tell the investors where they should allocate their resources. And we see all of a sudden this talk appears out of the blue that, you know what? Let's chop the cap price. I don't discuss on what number is good. I'm discussing on what happened to market mechanism and are we allowed to all of a sudden create such turbulences?
Right.
I would have had the very same comment if they have increased the gap rather than increasing. The thing is stability and long-term visibility in these things is crucial for all the new tech that are entering the market. If you're going to change things each 6 months, nobody cares that, these 6 months is great. We see long-term stability. If I cannot see how market is moving, we don't allocate resources. And investor thinks like that. We are having a lot of calls, a lot of pressure, and a lot of question that, where did this come from? Are we expected to see this kind of tectonic shifts each 6 months or year? And we have no answer for it. I'm not talking about the number. Put the number, whatever you want.
Right.
The point is, market should be clear,
Sure.
well communicated, and stable if you expect infra type of player invest in it.
I see. Well, I guess maybe it then begs the question whether it's a philosophical kind of idea where, I guess professionals like us, we feel that, the market mechanisms, the market should balance itself and opening up the market will be efficient and things like that. It incentivizes a lot of different players. But maybe some of the other, either legacy companies or other people might have a different philosophy and think that, no, this shouldn't be an open market and we should try to stabilize the prices for the end users. And maybe this is one way to try to stabilize prices. And I just wonder, I think everyone is having the same kind of like end goal of trying to stabilize prices, but just a different approach. And I guess this might be something where they're taking on a different philosophical approach.
Right on. Yeah, and I think when we're looking at the changes, I also want to just make it a little bit clear in the sense that when we are looking at like the ceiling changes, does this in any way help or does it only hurt the Japan long-term renewable integration, for instance? And maybe Ito-san, do you want to give this a go?
Yeah, so the great understanding and great insight, Mahdi-san. Yeah, the introduction of this price cap has not been officially decided yet. So, however, we assume that it will be begin to adopt in a certain period of 2026, and I believe this regulation change is too sudden and drastic, and it will have a huge impact on the market. So, especially to battery storage asset owners and investors who had optimistic revenue forecast in the balancing market. And they will need to fundamentally assess their investment payback plans. I have heard that some businesses who were planning to invest in balancing in batteries have already canceled their plans due to this potential regulation change. And in that sense, as Mahdi-san said, I think it is extremely unreasonable to lower the ceiling price while there is a continuing procurement shortage, than target. On the other hand, this may not have less impact on businesses who have made realistic or conservative forecasts from the beginning when they decided to invest to the battery storage, for example. Yeah. I have actually met such customer last week, and also our market forecasts have predicted future price change. All market participants were well aware that 90.5 yen was an incredibly high price. Yeah. So it's unrealistic to rush dealing at 9.5 yen for a longer period of time. And also if the selling price may be reduced to 7.0 JPY as indicated this time, it is still enough profitable for them to invest comparing to the other investment opportunity in the market. Yeah. So unless you don't expect that your investment will be paid off within 2 or 3 years by continuing to operate your asset storage batteries at the upper limited price 90.5, this investment opportunity in the balancing market would be attractive in the future. Yes, some people are thinking that the market will be more rationalized. Yeah, if the speculative market participants leave from the market due to this ceiling price change.
We can't fix everything in one go, but I do think with some of the changes coming in, hopefully this will create a little bit of a snowballing effect. One change might lead to other things. We'll see about this. Do you have any other opinions on the long-term investment side here? Or?
Well, the short answer is that it already did the damage. It really hurts the confidence of many savvy investors because it's introducing something called regulatory risk, the type of risk that no player can handle.
Right.
Let me give you a sample. We have big regulated banks. In Japan, the dividend yield is, well, if we stick to the theory that the dividend yield is just justifying amount of risk that people are attaching to that industry. And again, by no means I'm saying energy market is a stock market. But as an investor, I love to bring the economic philosophies to the thing.
Sure.
So the dividend yield of Japanese mega banks are what, 3%? And you go to China or Hong Kong and you see the same banks, I'm talking about tier 1 banks and regulated, the dividend yield is something around 6%. What has created this change in the yield? They are both banks, regulated tier 1 with the best reserve possible. That's the perception of risks around that bank. And one of the biggest is regulatory risk. So when you are creating these kind of sudden jerk movements, you are creating regulatory risk. Again, I stick with the mantra. I would have said the same argument if they have increased the cap rather than reduce it. What we want is stability, visibility. Just like when a central bank is when tweaking something like interest rate, they make sure to communicate well in advance, make it crystal clear that this is going to happen. And then you see people digest it. But if they do a jerk movement, then you see what will happen. The things that economy goes into turbulence.
Right.
That was turbulence creating me.
Right.
Coming and chopping the cap price from X to Y. How much public opinion did we gather on that? How much engagement with the industry did you have before coming and announcing it? This creates an understanding that we have regulatory risk here in Japan. And as Ito-san said, that things are not working. People are just in firefighting mode, patchwork. It didn't work. So in this meeting, let's reduce the cap. These things should be well thought.
Right.
But so in short, it really hurts the confidence. And if the discussion was to reduce the speculative business, which I agree with Ito-san, that's very dangerous, the speculative business. I think what they did is completely the opposite. Because if you had allocated resources and you see that market designers have no idea where they're going, what would you do? You would speed up your return on investment. You won't delay it because you want your return on investment as fast as possible and get out.
Right, before the regulation changes.
Before
again.
regulator change again.
Because
So
they're understanding this regulation and quickly. Yeah.
I don't know what's going to happen next. So you know what?
Right.
Chop chop. Let's finish the return on investment. This is a very well-known economic philosophy. It works in energy market as well. So if you create unwanted turbulence, people will not say, "Oh, let's just slow down." No, people will speed up return on investment because they want to exit, because they don't want their asset, their investment under risk.
Yeah.
So all these movements,
Yeah.
if the target was reduce the speculative behavior, what has done is actually increased the tendency of people that if you go to Japan, make sure you just get your return on investment as soon as possible, because you don't know when Mahdi is going to change your mind.
Well, Mahdi, you brought up a good point on regulatory risk. I think we've been receiving a lot of inquiries with these different kind of energy companies around the world looking at Japan. And really the first thing is, wow, they really need an expert to understand the regulations and the policies. And that's really the first guy that they really want to come in and understand the regulations first. Then they can find all of the business opportunities, all of the different revenue streams. Because you brought up that point, I'm just curious to find out, like, how much time do your teams or does your company kind of spend in terms of understanding and keeping up to date with these kind of regulation policy changes?
Japanese market is still reforming.
Yeah.
On the way.
Yeah.
And the following the European or North American advanced market. Yeah. So that's why at GridBeyond Japan, we hired the new regulatory manager.
Yeah.
This Shurai. Yeah, and he's worked for McKinsey before and support the government seventh energy strategy.
Okay.
Great mission, and he's great asset and to understand the properly the market forming change, regulatory change, and what it change further in the future.
Yeah.
But it is very important for us to develop our commercial strategy.
Yeah.
And deliver the right solution to the customer. Yeah.
Right.
So in this meaning, it is necessary cost for us, to do our business healthy.
Yeah.
Makes sense.
I guess from Mahdi, how about from a point of view of like, best assets, trying to design the commercial strategies around that is the first step to really understand all of the regulation policies and kind of set out what would be the best kind of commercial strategy, or how do you guys do about it within your team?
Oh,
Or is it looking at other markets, bringing other commercial ideas from other markets into Japan and try to set that up and see whether it fits into the regulatory framework here in Japan?
to be very honest, developing the ESS and VPP business in Japan has changed into 3D chess. As I also mentioned, what we should do, or the way we approach it, is definitely we should have a very good understanding of regulatory frameworks. But that's not enough, because things like battery have lead time, and these projects are infrastructure-like. So you should have a visibility or forecast or a sense of how it's going to evolve in coming years. The day you decide to do a large-scale ESS, the day that cash is flowing in, is you have at least 2, 3, 4 years, right? So what these kind of things is, of course, we day to day, we try to understand what they're saying. We try to digest what the real motives behind these waves are. That's we spend a good healthy amount of time, and that's just Japan. But also, if we're dealing with international investors, so we should have a very good understanding of what's happening in other markets,
Right.
and we should have a good understanding of how the business is done. One thing, and other thing is bringing. I had let's say I was blessed that I just had the exposure or just working experience in Australia or London. So there are things that you can bring, but Everything is about market design and regulatory. So if
Yeah.
that piece fits in the machine, is just how you design the market and the system. So there are things we can use, but there are parts that we think would work, but the regulatory doesn't. So overall, that creates a lot of problems to look into, or let's say steps, homeworks to solve before deep diving. Okay, now let's develop an asset. Developing an asset is this really late stage of things. First, you should have a very clear understanding of how regulatory works,
Right.
how the business is gonna evolve, not now, in
Yeah.
3 years.
Yeah.
Because that's the time that your cash is gonna flowing in.
Sure.
And then if you are exposed to international markets, then international investors will compare. They are not limited to the borders of Japan. Said these here, $1, 100 yen is working like this, but 100 yen in another market is going to work like this. Why? They don't really care about the flag that the money is just attached to money. Investors want their return.
Yeah.
So you should be in a position to compare, defend, and prove that you do better than international markets. I'm talking about the same energy storage or renewable field. I'm not comparing apple to oranges.
Right.
Sure.
So for me, all of this just sits on in my shoulder, or anyone who wants to handle a business should do these steps. Otherwise, it's going to end up in the speculative behaviors that we're going to see, that you're going to have this return on investment in 2 years, and how did you forecast 2 years from now the market is going to behave?
Yeah.
If we consider only the point of the upper price limit is reduced, and all factors remained constantly, no change, theoretically the IR rate will be lower, of course, and the payback periods also will be longer, than original one. However, the revenue simulation already expected in these price declines in a certain point. So in reality, there is no significant impact on the IR rate from the investors' perspective if they have the conservative, realistic forecast. An aggregator who has capability to foresee accurate future market rule changes or market price trend. So as we see it is in European market, we assume that the delta kilowatt values saturated, and the shifting to the energy trading kilowatt hour business. So it's possible that the similar shift will occur also in Japan. So shifting balancing market to JPX wholesale trading. Therefore, we encourage investors or asset owners to consider investing to the long duration batteries.
Understood. So basically, you've already put this into the calculations, and because of that, it's not as difficult to basically work on this. So in the end, it doesn't make demand response less attractive because it's already been forecasted correctly, or?
I think the demand response resources is behind meter asset is the most competitive resource rather than battery sets, because capex is smaller than FTM installation, battery storage installation. They can still be good resources in the PPP business.
Understood.
I think putting into kind of the model simulations, and I think that was what Mahdi was alluding to, like how do you forecast your revenue 3 years, 5 years, 10 years, 20 years, right, out into the advance, if there's regulatory risk, if it's changing. But, this really begs the question to see like whether this was more so, this ceiling price change was more so of a knee-jerk reaction from kind of recently what happened from that Hokkaido battery incident when the balancing price really shot up incredibly high, or whether this was something that they were already considering for some time. I'm not too sure, because I know that after Power Week, a lot of the professionals were kind of caught off guard with this sudden announcement. So I wasn't sure whether people were kind of already hearing about this or it was just a sudden thing.
I'm going to take this and just let's step back here. I'm going to definitely go to the incident, but for me, that's not an incident. Let's look at this. We should have, again, for me, price signal is pain signal. If you don't
Yes.
have enough, the price will go high. Nobody says why near Christmas the airfare is higher. It's the same airplane, it's the same seat, fuel is the same. Supply demand, and we are moving from a centralized energy system to more decentralized, and the bloodline of it is flexibility. And how you want to say that things need more flexibility, it's scarcity pricing, things that is completely well understood, markets like ERCOT, like Australia NEM. Even in UK, you have these things. So if you don't have enough, the prices should reflect it.
Yes.
We are the only country, Japan is the only country who said, no, it should be the same. And that really is betraying all the economic lessons that we know, that if you don't have it and you need it, you should pay more for it.
Exactly.
You don't ask when you are buying a chilled can of beer on top of a mountain from vending machine. Nobody says this can of beer. Why? I can buy it from supermarket with 100, I don't get 100 yen. I don't buy from vending machine. Why are you paying 500
The
yen?
economics of bringing that can up to the mountain
Right?
peak and then storing it there.
So the thing is, scarcity pricing is the way distributed assets understand where the problems are and where they should go. So those kind of price signals, I don't call them incident, I call them a very clear price signal. And that's why you had to see many people wanted to go to Hokkaido because of that. Everything, if it's challenged, there's a chance for it.
Yes.
Ooh, you can fetch those kind of prices, you go there.
Yes.
And then market gets saturated easily.
Yeah.
That's how the things in ERCOT was working. So it's a very proven phenomena.
Yeah.
We can't swim against the flow. If you want to move from centralized to decentralized, if you really want renewable energies to get in, you need flexibility. And flexibility, nobody can sit in an office and say this, order people, go there, go here. Price signals ask where the money and resource should be deployed. So that price signals, instead of trying to choke it,
Yes.
was something to use it.
Yeah.
And where do we see? The thing is, knowing Japan, people would expect people jump in and try to, let's say, regulate the hell out of things. But then the question is, if you really want to go to your own roadmap, the amount of renewable you need, that you say you need, how do you want to deploy it? With orders? Or you want to create an business case for it? And if you create it, how do you want to make sure the batteries come in? It's a matter of business case for it. We cannot expect the developers take all the risk of regulation, the risk of inflation, the risk of lack of return on investment and everything. And then we kill all the volatility in the market and say, you know what? Marginal cost that you were paying the legacy players were for the business model of guaranteed rate of return.
Right.
Are you guaranteeing the rate of return for renewable project, battery project? No. Then why are you expecting the same behavior? Do you see the same behavior in bond market with the yields and stock market? Why? Because there are different phenomena. The guaranteed rate of returns has a different behavior. You are guaranteed that your return is going. So that guarantee comes with the cost that, hey, your return should be very much managed. But when you are not in that sphere, many of your projects might go bust. How do you want to recover that? That's why you see in many of the successful, well, if you can say, you see scarcity pricing, and I always ask them, where is your scarcity pricing so we know where we should deploy assets? You don't have any. Energy is, this is the bond that you say, okay, so And where these kind of demons show themselves, I don't want to go that much back, but what happened in 311? And it's, ooh, there were some parts that we needed investment and we didn't. Why they didn't show themselves? Because there were no signals and you didn't understand where you need to invest. So for me, those kind of price shoot-ups, if we can say that, for me was very informative that I see there are shortages there.
Yep.
So that was a good signal for everyone that, hey, there are shortages there, go there.
Yes.
That's why you see people started focusing on Hokkaido in the initial days.
Yeah.
Kyushu, and killing those kind of signals, it might give people a very, let's say, short-term sense of achievement of, okay, we killed those behaviors.
We stabilize the price.
But what you did is you are using painkillers to cover a disease, and in long run, it's gonna get back at you. Why the prices shoot up? Nobody is gaming the market. It means you want, nobody's selling to you.
Yeah. There's a shortage. Yeah.
There's a shortage.
Yeah.
So how do you want to say people there is a shortage here if you don't have healthy price signals? So what I see here is that we wasted the chance of changing a healthy price signals into making sure the investment flow. We lost that chance by choking the things and said, okay, no, everything is 7. If everything is 7.19, whatever the number, I don't discuss on the price cap. Put in whatever you want.
Sure.
How do you understand that you need more investment there and shortage there?
So, Ito-san, I guess with this current situation, then what do you think? Will this slow down kind of best investment here in Japan?
Yes, so best investment will slow down temporarily. Yeah. However, in reality, there is a gap between target procurement volume and actual procurement volume. Yeah. So the exit of speculative businesses may lead to a more appropriate supply and demand balance in the best market. So in the future, the government should set clear target for the introduction of the best capacity to the market. And this helps market players to predict the future market clearly compared to today, and setting the appropriate pricing policy is important. So this helps us develop a rational market.
Any positives from this at all, or are we primarily looking at the negatives here? Because essentially, when I went into this, I thought that, well, these are some of the patchworks, and it will, of course, look at some players who are making quite a bit from this. Of course, in the broader sense of it, it doesn't matter as much probably because there are other revenue streams that we're looking at. But when we are looking at these services, having this more of a flat revenue number here, it will not kill the flexibility, but the constant changes might. Is that correct? In your understanding as well, or?
I'm just really trying hard to say positive, but to be based on my, again, I become an old man in this industry, but to be honest, no, this is a very dangerous behavior. Not respecting the stability of investments, changing the goalposts all the time because somebody did something. These behaviors always end up in a crash, or creating a far higher risk premium people put at investment. So, and it also sending a very wrong signal that new players are not welcomed. Because we didn't see this kind of change when there were not so many new players. We are seeing all of a sudden this kind of getting very skittish about a very small part of, again, I get back to that, balancing market's a very small part of the business and energy costs. Very small. It doesn't mean we want to waste money on it. No. The thing is, are you seeing the bigger picture? And these sends a signal that, well, there is not that much foresight on the bigger picture. Unfortunately, no, I don't see. With this trend, I have, let's say, not apocalyptic, views, but I'm seeing that risk premiums that people put on investment is going to increase. There are going to be very questions on, should we allocate resource here in this country? Why not Australia? International investors have this chance. It was our job to make this country or this energy a, let's say, acceptable, well-regulated. By no way I'm saying that we want a wild west. That's not how it works. Well-regulated, not patchwork, and fair. The fairness is the key. The fairness is the key. We didn't see these kind of, again, cries when legacy players were just enjoying something.
Right.
So at the end of it, no, with these movements, I don't see any positive. But if you are putting a gun on my head and definitely say something positive, is that this kind of knee-jerk reaction phase is a phase that many regulators go through in many countries, especially in countries like Japan that always prefers stability over growth. So they are doing what they can, and when they see that that's going to be in vain, they will graduate from it. That's the only hope I have.
Right. One thing sorry to interrupt here, but one thing that I do actually, when I was looking at this, I think the revenue was quite high at the 19.51 mark. And they've actually kept this for quite a long time. And in my head, it's been in a positive way that we've had it at this high for quite some time, to actually bringing in a lot of investments into the market. Whereas this probably is a change that could have been changed a few years back in that sense, right? So you've kept it at a high end to bring in more investments, to bring in more people into the market. But now that they're finally changing it, you're saying, of course, this is a risky outlook, but it would have been probably worse to have changed this a few years back, though, because then you would have seen a little bit less investments into the Japan market, perhaps.
Well, the thing is, the way I'm seeing is that, again, let's step back. We should ask ourselves why the prices are at cap all the time. Because your market is under procured. Let's go solve that one. Markets are not designed to be, let's say, always work at the cap. If it's working at cap, something is wrong with your design, not the player. And what's the reaction? Why people are not bidding in flexibility market? Why are not solving that? Why your legacy players are not bidding in a market? They are very happy to get bilateral contract for the same product. So you are competing with a legacy player. The target is flexibility. They get a preferential treatment. They get a bilateral contract out of the market for the very same. So now I'm asking everyone who has a hand in, let's say, economy, and how does that sound fair? That we are fighting for something, but legacy players get, let's say, a bilateral, non-competitive process. If the market was so damn good and profitable, why they didn't sell it at market at the cap? It means, so if I was a shareholder in a legacy player, I would ask the CEO that, hey, you could enjoy this much in ancillary. Why did you sell it cheaper to...
Right.
So that's, from a shareholder perspective, that's going to be breach of trust of a CEO.
Sure.
You are selling flexibility. Market offers you X. You're offering to the government or Octo or whatever it is Y, and the Y is less than X. From a shareholder perspective, how would you feel? You will feel betrayed. So it shows that those legacy players and all of them, they are very professional. They are not doing it. They care about their shareholders. So they are not offering these services cheaper than what they could do in market. Market, even with this cap, was not enough for them. That's the reason you are not bidding in the market. So why we are not solving that issue? Put the cap at zero. Let me give you a very easy solution. Put the cap at zero. All the solution is going to be cost. You have zero cost of balancing. But is that a solution? Sending someone to coma doesn't mean you treated them. They want to scream from pain, but it doesn't mean you're treating them. So I hope they graduate from this phase. And when they see that this patchwork for the gigantic market like energy won't work, and it's not going to be efficient in long term, they're going to get back to the, let's say, textbook definition of the competition. And that's, again, if you really force me to say if there's anything positive, that's the hope in my heart.
Yeah, it's a very important alert and suggestion to the Japanese market. Yes, what Mahdi said. It's totally agree. And on the aggregator's viewpoint,
Yep.
So we should provide the solutions that to cover, to trade the multiple product, balancing market capacity or wholesale, whatever, and foresee the future, the regulatory change, in advance. Yeah, so we covered the topic, the arbitrage, the wholesale market. Yeah, we we should enjoy this kind of the business and provide solution for the asset owners, investors. So we continue to make effort for that, and also the government has not yet officialized the target volume,
Right.
procurement volume of the battery storage clearly.
Yeah.
So they are struggling to set the right policy in the market. Yeah. So very ambitious target, net zero in 2050, but the struggling reaction to the fit policy still, and now also struggling to manage the speculative in the pricing market. Yeah, this is the real situation. But yes, we continue to make an effort.
Yeah.
Service.
It's a little bit of a change that's constantly happening, and if we do change a little bit too much, it will be more of a negative perspective for the Japan overall energy side of things. But yeah, these are still things that could change. This is not set in stone yet. It does seem like this might, we don't know, but it does seem like this might be the policy change and the actual numbers that they are bringing out. So hopefully they won't be constantly doing these changes, these smaller changes, because the patchwork won't actually change the overall market of the energy industry in Japan.
So we're coming to an end. Just a couple of questions with your one sentence answer. Biggest short-term impact. Maybe Ito-san, can you go first?
Sure. Yeah, it's a prepare for the optimized bidding across multiple products. Yes, I covered before. Yeah, and multiple market, it's not just FCL, only FCL, and while reviewing the validity of your revenue forecast.
Mahdi?
Increased investment risk and necessity to have optimization skills among different revenue streams.
Biggest long-term impact.
Yeah, so it's a positive impact. Yeah, on investors or market participants who expect stable returns. Yeah, over long term.
I think probably Mahdi has been talking a lot about the long-term impact there.
To make it fun, I'm just going to be contrarian. I think it's very negative on the stability, the patchwork if they continue.
Yeah.
And we would see some resource escaping from this market. It's a nascent market. And this resource include talent, money, and ambition.
And final question, still bullish on Japan power markets?
Yes, totally yes. So the Japan is one of the most mature, stable, and scaled market. Yeah. So this market is still developing, but yes, the system reforming will be set year by year. Yeah, and we offer the many growth opportunity. In the market in the future.
Bullish or bearish?
If I was just a participant, I would be bearish, but it's our job to make it better. Even not for me, for my kid. So it's my job in this industry to make it rational, sustainable, and growing. So due to that, I'm putting this passion, or let's say time and effort to help improve it.
Yeah.
If I want to be a very passive one, from top of my head, I can literally select at least 3 or 4 countries that I would allocate resources better than Japan. right now, off the bat.
So still putting in a lot of action. And I think, if things were easy, then we wouldn't have anything to do here. That's what we're all trying to do here. So
That's right. And if everyone put the money into those 3 to 4 countries, then
It's going to happen the same. They're going to crash.
exactly. There you go. So yeah, I think it is good to kind of allocate investments into different areas there, for sure. All right. Well, this has been the Japan Energy Podcast. Thank you so much for listening, and don't forget to subscribe on the different podcast pages, podcast services, and anywhere on LinkedIn or Spotify or wherever you can find us.